Summary of How to Day Trade for a Living. A Beginner's Guide, by Andrew Aziz, written and narrated by Janky Mind. Introduction. Discover the captivating realm of day trading with the guidance of How to Day Trade for a Living. This comprehensive resource equips you with established techniques and valuable insights to attain a steady income through day trading. This practical handbook simplifies intricate ideas, uncovering the potential to transform the stock market into a lucrative venture. While the saying goes that knowledge is power, in the realm of day trading, knowledge translates directly into monetary gains. If you've landed here, you likely aspire to trade your conventional 9-to-5 job for the flexibility and financial promise of day trading. Your aspiration is justified. Day trading has the potential to grant you greater time freedom and improved financial prospects. Nevertheless, it's important to exercise caution and avoid expecting extravagant worldwide travels immediately after your inaugural month as a day trader. Despite its outward appearance of simplicity, day trading is inherently intricate. Flourishing in this arena necessitates an initial investment of time to acquire expertise, starting with a firm grasp of the fundamentals. Contained within this audiobook, you will gain insights into the intricacies of day trading, the necessary preparations for embarking on a day trading journey, and the strategies that facilitate consistent profitability. Chapter 1: Introduction to Day Trading. Day trading is a distinct style of stock trading that takes place within a single day. Unlike traditional investors and swing traders, day traders do not retain any stock positions beyond the market's closing hours. They liquidate their holdings during the same trading day. This approach is chosen because day traders seek to capitalize on brief price fluctuations. Their focus is on the immediate movement of prices within seconds or minutes, rather than the long-term performance of a company over months or years. Profitable day trading hinges on two primary strategies: going long and short selling. Going long involves purchasing stocks at a lower price and selling them when their value increases. Conversely, short selling entails borrowing stocks from a broker at a higher price and returning them when their value declines. Contrary to misconceptions, day trading is unlikely to generate rapid, substantial wealth overnight. In reality, consistent profits may only materialize after approximately 6 months of dedicated effort. Achieving these results necessitates a committed approach to day trading. It is not a casual pastime that can be pursued in sporadic moments. Rather, it demands substantial time and energy investment, akin to running a business. Similar to any other enterprise, attaining success in day trading demands a solid educational foundation. This entails reading relevant literature, attending educational courses, and potentially seeking guidance from a mentor. Engaging with trading communities and online chat rooms can also prove invaluable, as members are often willing to share their strategies and offer support. Certain chat rooms even afford the opportunity to observe live trading sessions. Once the foundational knowledge is acquired, it becomes essential to practice on a simulated trading platform prior to engaging in real trading. A simulator mimics an actual trading environment but employs virtual currency. As a general guideline, it is recommended to practice on a simulator for at least 3 months, during which time you can fine-tune and perfect your trading approach. In addition to education and practice, the right tools are indispensable for embarking on day trading. Among these tools, 3 stand out as particularly crucial: your broker, trading platform, and scanning tools. A broker is essentially a company that grants you access to stock exchanges through a website or mobile application, typically in exchange for a fee. To commence trading, you'll need to establish a brokerage account with your chosen provider and fund it. Opting for a direct access broker that facilitates swift order processing is advisable, as trades can unfold within seconds. Subsequently, you'll need to select a trading platform, the software through which you execute your orders. Once your order is transmitted to the stock exchange by the trading platform, your broker executes the trade on your behalf. Lastly, pre-market and real-time intraday scanners are pivotal tools. These programs furnish you with lists of potential stocks to trade. Both scanners can be customized to align with your predetermined criteria, streamlining the process of identifying trade-worthy stocks. Day trading has the potential to be a gratifying pursuit, contingent on your unwavering commitment to continuous learning and improvement. Chapter 2: Effective Day Trading Strategies. Your trading strategy serves as your blueprint, a method to enter, potentially profit from, and eventually exit a trade. If you're new to trading, the author suggests two beginner-friendly strategies, the ABCD pattern and the opening range breakout, ORB. Let's delve into the ABCD pattern first. This classic and fundamental strategy encompasses 4 points. It commences at point A, where you observe an upward movement in stock price, progressing to point B, which marks the day's notable new high. The price then retraces to point C, settling at a level still above point A. From point C, the price once again climbs to a new peak at point D. When utilizing the ABCD pattern, start by monitoring a stock that displays an A to B trend. Exercise patience and refrain from premature action, simply observe until the stock reaches point C. Once the price stabilizes at point C, enter the trade as close to this point as feasible. Set your stop loss just below point C to minimize potential losses if the price dips below it. Conversely, if the price advances toward point D, seize the opportunity. Sell half of your position at point D and adjust your stop loss to your entry point. Subsequently, sell the remaining shares either at your target price or when you anticipate a price reversal, usually signaled by a new low on the stock's 5-minute candlestick chart. Now, let's explore the opening range breakout, ORB, strategy. This approach revolves around the opening range, the price variation between the market opening and a defined time interval afterward. A price movement beyond this opening range serves as your trigger to enter the trade. The waiting period varies among traders, but beginners should consider holding off for at least 5 minutes or longer, with 30 to 60-minute periods serving as reasonable starting benchmarks. For the ORB strategy, commence by monitoring your selected stocks during the initial 5 minutes of the market's opening. Look for indicators such as substantial trading volume with diverse orders, price direction, and the stock's opening range. Ideally, the opening range should be narrower than the stock's average true range, ATR, a metric visible in your scanner program. After the initial 5-minute window, assess whether the price has moved above or below the opening range. An upward movement suggests a long position, with your stop loss placed just beneath the volume-weighted average price (VWAP) line, a key marker for day traders, likely already featured on your trading platform. Conversely, a downward movement calls for a short position, accompanied by a stop loss positioned just above the VWAP. In either case, set your profit target at the subsequent significant level or when you anticipate a potential price reversal. While the ABCD pattern and ORB strategy serve as solid starting points, an array of day trading strategies awaits your exploration and implementation. Nonetheless, it's advisable to master one strategy before progressing to the next. Stay committed, evaluate its effectiveness, and throughout your journey, you might find yourself adapting the strategy to create a customized approach that aligns with your style. This adaptability sets you apart from other traders and has the potential to lead to consistent profitability. Chapter 3: Achieving a Successful Trade. Executing successful trades necessitates a well-structured trading process that encompasses actions before, during, and after market hours. Adhering to this process is vital for consistent success in day trading. Begin your trading day well before the 9:30 a.m. New York market open. This early start allows you to mentally and physically prepare for the challenges ahead. Incorporate aerobic exercise, hydration, and a balanced meal into your routine. Aim to be at your workstation approximately 2 hours before the market commences. Once situated at your desk, it's time to compile your watch list of stocks in play. These are stocks that are less influenced by computer algorithms and institutional traders, making them more suitable for day trading. Identifying such stocks involves several steps. 1. Look for stocks moving against the general market trend due to fundamental catalysts or recent news, such as earnings reports, product launches, or major announcements. 2. Observe pre-market trading activity, focusing on stocks with a minimum of 50,000 shares traded. 3. Identify stocks that have gapped up or down by over 2% in pre-market trading. 4. Ensure these stocks reach significant price levels during trading hours. To further refine your stock selection, apply additional criteria. Seek stocks with abnormal trading volume compared to their usual volume, ideally surpassing an average daily volume of 500,000 shares. Target stocks with an average true range (ATR) of at least 50 cents. Utilize your pre-market watch list and set up your watch list program with these criteria. Leveraging insights from trading communities or real-time market scanners can also aid in identifying stocks in play, particularly if you're following a specific strategy. From your watch list, choose 2 to 3 stocks for focused attention. Conduct thorough research on all potential stocks and finalize your shortlist about 15 minutes prior to the market opening. With your shortlist established, formulate your trading plan. Analyze each stock's chart for familiar and reliable patterns you've encountered before. Craft your plan using if-then statements, outlining actions to take based on specific scenarios at designated price points. This approach defines your entry, profit target, and stop-loss levels. When the stock aligns with your trading plan, execute your entry strategy. Once in the trade, it's crucial to adhere to your plan diligently. Only exit the trade at your predetermined points to mitigate potential losses. Consider ending your trading day after reaching your daily profit target or completing 2 to 3 trades. Avoid excessive trading, limiting yourself to a small number of trades to maintain focus and discipline. Conclude your trading day by documenting your trades in a journal. Reviewing your trades helps refine your strategy, and sharing your journal with a trading community or mentor can provide valuable feedback. While your specific trading process may have some variations, the key lies in faithfully following it and executing each step thoughtfully. This disciplined approach enhances your prospects for consistent success in day trading. Chapter 4: Mitigating Risks and Effective Trade Management in Day Trading. While day trading offers excitement, safeguarding your account from depletion is paramount. To ensure success, mastering risk and trade management is essential before venturing into real money trading. Begin by selecting appropriate stocks, concentrating on those in play as discussed earlier. Avoid stocks that don't meet this criterion. Further minimize risk by identifying setups with a profit-to-loss ratio of at least 2 to 1. In such trades, your potential profit should be at least twice your potential loss. Avoid trades with ratios below this threshold. Set clear stop-loss levels for each trade to prevent emotional decision-making. Emotions can lead to larger losses than anticipated. Your stop-loss should never risk more than 2% of your account. Define your share size thoughtfully. As a novice, starting with a standard lot of 100 shares is recommended. Calculate your maximum share size using these steps. 1. Determine your maximum dollar risk, not exceeding 2% of your account. 2. Calculate your maximum risk per share in dollars. 3. Divide your maximum dollar risk by your risk per share to obtain the maximum share size. Effective trade management is equally crucial. After entering a trade, use real-time price action to guide your decisions. If the trade progresses favorably, consider adding to your position. Sell portions of your shares at different target points. In contrast, if the trade turns against you, refrain from purchasing more shares to limit losses and exit promptly. Beyond technical analysis, understanding the psychology of trading is pivotal. Your mindset significantly impacts success. Shift your focus from immediate profits to mastering the process. Acknowledge that consistent gains may take time, and prioritize skill acquisition over monetary gains. Discipline is paramount. Emotion should not dictate your trading decisions. Stick to your initial trading plan, even in the face of losses. Accept losses gracefully and learn from them. Physical and mental well-being are essential for optimal decision-making. A healthy body contributes to a sharp mind, enhancing your trading performance. With these strategies in mind, you can effectively reduce risks, increase profitability, and elevate your overall day trading success. Summary: day trading transcends mere stock transactions. It's a serious pursuit if you aspire to forge a lucrative career. Accomplished day traders invest considerable time and dedication into equipping themselves with the necessary tools, knowledge, and a comprehensive understanding of the intricacies of the field. Equally vital is the adept management of emotions. Undoubtedly, day trading presents challenges, yet these shouldn't discourage you from embarking on the journey. Rather than prematurely surrendering, embrace the difficulties as opportunities for growth. If your passion for the industry burns bright, challenge yourself to take the plunge. Embrace the risk, it may well pave the path to remarkable achievements. This audiobook summary was brought to you by Janky Mind. We hope you enjoyed it.